Imagine waking up to find half your crypto portfolio gone overnight. Over $12 billion was lost by crypto beginners in 2024 alone. The crazy part? Most of those losses were totally avoidable. If you've ever felt the gut punch of a bad trade or watched unrealized gains vanish, you're not alone. In the next 10 minutes, we'll expose the 7 rookie mistakes that cause most people to lose money in crypto and how you can avoid every single one. Stick around, because avoiding these pitfalls could save you thousands and a whole lot of heartache. Mistake number 1 is FOMO, fear of missing out. This is when you chase a coin that's skyrocketing because everyone else is, only to buy near the top. Research shows 84% of crypto investors make decisions based on FOMO, so don't feel bad, it's human nature. Maybe you saw a token exploding on Twitter and you thought, I gotta get in now or I'll miss the boat. You hit buy, and the next day, that coin dumps hard, leaving you holding the bag at a loss. Sound familiar? Riding hype trains means you're often buying high and selling low, the exact opposite of what you want. How to avoid FOMO, have a plan for each investment and stick to it. Do your own research on a project's fundamentals instead of trusting the Twitter hype machine. If a coin has already pumped 50% today, pause. Remember, what goes up fast can come down even faster. It's better to miss an opportunity than to jump in blind and lose your money. Next up, not taking profits, aka getting greedy. This is a big one. You watch your coin double or triple in value, your portfolio screenshot looks amazing, and you think, why sell now? It's going to the moon, full moon. But here's the harsh truth. Unrealized gains can vanish overnight. Nothing goes up forever in crypto. The market gives and the market takes away. Too many rookies ride a winner all the way up and all the way back down because they never hit that sell button. As one crypto investor put it, I'm in crypto to make money, not just smile at my portfolio balance. I only make money when I sell and take profits. The fix? Take profit on the way up. You don't have to sell everything. Even selling 10 to 20% of your holdings at preset targets can secure some gains. Think of it as paying yourself. Did your coin 5 times? Awesome. Skim a little off the table for you. Clinking beer mugs also set realistic profit targets before emotions take over. When those targets hit, stick to the plan and bank some profits. Trust us, you'll thank yourself later when you have cash in hand and no regrets. Mistake number 3 is overtrading, trying to trade everything all the time. New traders often feel like they must constantly be doing something, chasing every small price swing, jumping in and out of positions 24/7. Maybe you're trying to win back losses, or you're just addicted to the adrenaline. The result? You rack up a ton of fees and bad entries, and you burn yourself out. In fact, making 20+ trades a day is usually a recipe for death by 1,000 cuts in fees and mistakes. Overtrading often leads to serious losses because the more you trade, the more likely you'll make a bad call. Smart trading is about quality, not quantity. Have a clear strategy. Pick your setups carefully rather than reacting to every blip in the market. It's perfectly okay to sit on the sidelines when nothing looks good. Waiting is a strategy too. Remember, you don't get bonus points for number of trades, only for profitable ones. So slow down, plan your trades, and avoid turning your portfolio into a casino pit. Mistake 4 is playing with leverage like it's monopoly money. Leverage lets you trade with borrowed funds. Sounds great to amplify gains, right? But it can destroy you if used wrong. Picture this. You're on a 50 times leverage trade, meaning a mere 2% drop in price will wipe out 100% of your position. Boom, account gone. Using 50 times leverage in crypto is like driving 100 miles per hour in a school zone. Even if you're a good driver, one small mistake can end in total disaster. Many beginners learn this the hard way when they get liquidated. The lesson? Treat leverage with extreme caution. If you're new, you honestly shouldn't be touching high leverage at all. If you do use it, keep it low and only on money you can afford to lose. Always set a stop loss so one trade doesn't torpedo your whole account. Remember, pro traders care more about not losing money than making a quick buck. Leverage is a tool, not a toy. Respect it, or it will wreck you. Mistake 5, leaving all your crypto on an exchange as if it's a bank. Newsflash, not your keys, not your coins. Exchanges are hot targets for hackers and can even freeze withdrawals or go bust. In just the first half of 2025, over $2.1 billion was stolen from crypto exchanges, including a single $1.5 billion hack on a major platform. If you were one of those users, poof, your money vanished. We've seen this story with MT Gox, with Quadriga, with FTX, and it keeps happening. The reality is, no exchange is 100% safe. So what should you do? Use exchanges for trading, but store long-term holdings in a secure wallet. For significant amounts, get a hardware wallet. At minimum, enable all security features like 2FA if you must keep coins on an exchange. The goal is to minimize your exposure. An exchange can freeze your funds without warning, but if you hold your own keys, you're in control. Don't trust a third party with your life savings. Be your own bank and protect those coins. Mistake 6 is trusting unverified tokens and sketchy projects. In the crypto world, anyone can create a new coin out of thin air. There are thousands of tokens, and frankly, many are outright scams or junk. Maybe a friend or some influencer on TikTok says, "This new coin is the next Bitcoin. Get in now," and you ape in without doing homework. Next thing you know, the project disappears or the developer's rug pull, and you're left with worthless tokens. It's sadly common, from meme coin manias to fake ICOs. Scammers prey on FOMO and ignorance. To avoid this, practice the golden rule, DYOR, do your own research. Before you invest in any altcoin, deep dive into its white paper, roadmap, team, and community. Check if it's been audited or has a real use case. Red flags include promises of guaranteed returns, anonymous teams, or pressure to buy right now. If something sounds too good to be true, it probably is. Stick to projects with transparent teams and proven track records, especially when you're starting out. In crypto, blind trust equals expensive lessons. Finally, mistake 7 is showing off screenshots of gains instead of actually realizing them. A lot of newbies get caught up in the clout, bragging on Twitter or to friends about how their portfolio went up 5x. They post screenshots of big paper profits, bask in the likes, but never hit sell. This usually ends one way. Those screenshots become the only proof you ever had money because the market dumps and your profits evaporate. Ouch! Trading isn't about flexing on social media or seeking validation. It's about making money and keeping it. Plus, advertising your crypto wealth can make you a target for hackers or thieves, which is another risk entirely. The takeaway here, check your ego at the door. Don't trade for bragging rights. Trade for financial gains. It's fine to celebrate wins, but do it after you've secured the bag. Move in silence if you have to. And remember, humility beats hubris in this game. The moment you start thinking you're a genius and showing off, the crypto gods have a way of bringing you back to reality. Stay focused on your goals, not on impressing others, and you'll avoid a lot of pain. We've been through the gauntlet of what not to do. Let's wrap up with a simple 3-rule framework to keep you on track. Think of these as your cheat codes for trading smarter. 1. Plan every trade. Never ape in blindly. Do your research and have a plan for why you're buying and when you'll sell. A trade with no plan is just gambling. Set clear entry and exit targets and stick to them. 2. Protect your capital. Treat your money like a limited resource. Only invest what you can afford to lose. This removes life-ruining stress. Use risk management on each trade to prevent any single mistake from wrecking you. And secure your coins. Use strong security practices and hold long-term assets in your own wallet. Capital preserved equals opportunity to fight another day. 3. Control your emotions. This is huge. Greed and fear will wreck you if you let them. So commit to a mindset. Take profits when your plan says to and cut losses when you need to. If you're overly emotional, step away. No FOMO trades, no revenge trades. Trade like a robot with clear rules, or don't trade at all. Remember, consistency beats impulsivity. These 3 rules encompass all the mistakes we talked about. Plan, protect, and be pragmatic. If you can do that, you're already ahead of 90% of crypto newbies out there. There you have it. How not to lose money in crypto in a nutshell. We've all made mistakes, but now you know how to avoid the 7 rookie errors that sabotage so many beginners. Learn from others' scars instead of getting your own. Crypto is an amazing journey, high risk, high reward, but by staying smart and keeping your emotions in check, you can ride the waves instead of getting wrecked. If you found this video helpful, do me a favor, smash that like button and subscribe to the channel for more real talk crypto guides. Hit the notification bell so you don't miss our next video. We've got more tips and market updates coming your way. Question of the day: what's your biggest crypto mistake or lesson learned? Drop a comment below. I'd love to hear your stories. Remember, the best teacher is experience, and it doesn't have to be your own. Thanks for watching, and until next time, trade smart and take care. Happy investing. Rock it.